All right. Back to work. We're not done just yet. We got one more day left this week. Boy, what a fantastic day today. How much do we love those double bottom reversals? If you missed Wednesday night's video, you want to go back and watch Wednesday night's video because it explains exactly what's happened over the past 24 hours. So make sure you go back and watch that if you haven't done already. But fantastic day today. Now the markets are ripping higher. But I'll tell you right now, when you see these charts tonight, you'll see this looks like a beautiful spot for a bull trap here ahead of non-farm payrolls for tomorrow. I have 3 different ways to time the perfect bull trap entry. And if I'm wrong, we got big news tomorrow. If I'm wrong about that, non-farm payrolls, I got a game plan with some breakouts going higher as well. I'm going to cover all the details tonight of a bunch of trades I'm tracking for tomorrow. By the time we're done tonight, you'll have an easy roadmap to make a lot of moolah on non-farm Friday. And before we jump in and to my favorite trades for tomorrow, make sure you subscribe. Make sure you join the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these, if you enjoy these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section. Thank you so much for tuning in, supporting the channel. I missed you guys last night. Hope you guys made some money out there today. Now back to work tonight. Charts are all ready to go. I'm getting goosebumps thinking about non-farm Friday coming tomorrow. Nasdaq triple Qs are ready. Oh, the E-mini and the SPY is ready. I have 3 clues on these charts here tonight that are telling us where the winning trades are going to be for tomorrow. One of those 3 clues is right here on the 60-minute time frame. We are bullish overall right now on both the Nasdaq and the S&P, but you can see right away we've got lower highs, we got higher lows, lower highs, higher lows. It smells like there's a range brewing right here. And if you guys know my style of trading, we know ranges act like magnets, and this seems like the perfect spot up here for some bull traps and runs back down into that trading range. Now, the 60-minute time frame, I like to use that for kind of the big picture, the big game plan for tomorrow. But the problem is the 60-minute chart, it's not going to help us with entry timing, right? Entry timing is kind of the hard part, right? So we'll talk about entry timing here and 2 more important clues. But before we do that, though, let's check our schedule for tomorrow because tomorrow's a pretty busy Friday. There are 3 things on my radar for tomorrow. First things first, we all know this, right? Tomorrow's non-farm Friday. This is always an important news number. The first Friday of every 1 month is the employment number, the non-farm payrolls. Very important right now because we know the Fed is trying to decide if and when they're going to cut rates this year. Later on in the morning at 10 o'clock Eastern Time, the ISM Services Index. Jay Powell, all the FOMC speakers have told us repeatedly the service sector is the most stubborn part of the inflation situation. So that is something on our radar for tomorrow. And also, too, tomorrow's a Friday. We have in our trade room called the Friday Mindset. What does that mean? Well, as the day gets later on a Friday, after 12 o'clock, 12:30, the markets get illiquid, right? They get illiquid. There's not a lot of liquidity. Also, too, as the day gets later on a Friday, we lack discipline, right? I know I'm not the only person that's made poor decisions on a Friday afternoon. So think about this. The later the day gets, the worse the markets get and the worse my decision-making gets. So my mindset on a Friday is to get into trades early, take profit quickly, lock up some gains on a Friday, remove risk, get those stops to point of entry. But I always like to leave a runner on a Friday afternoon because Fridays get illiquid and they love to run. We call that the Friday mindset. Early in, early targets, remove risk early, and leave a little piece because you can see when you go back and look at Fridays love to run in the afternoon. So big news tomorrow, employment number 8:30, ISM services at 10 o'clock. That's the wild card for tomorrow, in my opinion. And again, that Friday mindset. Get in early when the markets are good. Get in early when we are feeling good and take that profit and leave that runner. Now, back to our charts, though, because it's good to know when the news is, but we know by now, right? The money is made on the charts. Let's now cover, I talked about earlier, there are 3 important clues here that are tipping us off the best trades for tomorrow. The 60-minute chart, again, smells like we might be in a spot here for a bull trap. But again, this is not helping us time the entries. Entry timing, I think, is better off on a tick chart. This is a 7,000 tick chart you'll see up there in the upper left-hand corner. And if you're watching for the first time right now, that yellow line right there, that's the 21 EMA. It's pretty much the only indicator you need to come out and join us and trade with us every morning in our morning trade room. There are two more important clues right now on this tick chart. One of them are the ranges you see in front of us. There's a range right there. Now, in our free trading course, we talk about ranges, how they love to rotate, right? The amount below the range will be projected above the range. We call these pendulum swings, right? That's a key level of resistance up overhead. There was also a tiny range there late morning this morning. Anytime we see a range breakout, the breakout leg becomes a measured move. Boy, amazing how those are pretty much the exact same location right around that big top, that kind of mid-FOMC reaction that we saw yesterday afternoon. Now, one more clue on this. You'll notice up top here, and keep in mind, guys, this is the S&P right now. This is almost exactly the same on the Nasdaq as well. The prior week close. Now, we don't talk about the prior week close very much, but at the end of the week, the prior week close, right, where we closed the session last week, you'll notice it's been quite a long time. We've been back to that area here. These oftentimes act as key psychological targets, right, and resistance levels up overhead here. So now think about this, right? We got that range on the 60-minute time frame. We know we're pretty bullish. I mean, there's no doubt about it, right? We're pretty bullish here coming off that low, but I'll tell you, it's very difficult to want to buy up here, right? So I have three different bull trap techniques to look for tomorrow. We'll talk about those in a lot of detail here right now. That way you know different variations of way to capitalize on that. And again, we got non-farm payrolls tomorrow morning. So I do want to put a plan together a bit later on in the video. If we don't get that bull trap back down again, I want to put a plan together because there's two scenarios I'm looking for if we do see a positive reaction to that non-farm payrolls tomorrow morning. So we'll talk about that game plan, kind of the backup game plan, a bit later on in the video. So take some screenshots. This will be a great video from start to finish. Now, talking about bull traps up here, I don't pick tops, right? So I'm not going to sell into this area. For all I know, it'll keep going, right? What I want to do is trap in the buyers as they get up into the area. In fact, there's one right up there. Look at that pattern right there. This we call a failure pattern in our free trading classes, right? We go up. Again, I don't want to buy up here, right? I want to sell up here, but because we're so bullish in the short term, I can't just short it. What I'll do is I'm going to wait for the price to pull back to that 21 EMA, let those buyers try once, go lower, try twice, right? Notice that lower low in price there. That's the key because buyers now are fully engaged. Now think about this. If the buyers are kind of long right now, where are their exits? Where are their stops? If you are long and you get stopped out of your long position, what happens? There's only one way out. You have to sell your way out. So if we can run some stops, I would love to get, what I'd love to get is a failure pattern into a bull trap pattern on the way going lower. This is going to be a key theme throughout the rest of the lesson here tonight. We'll talk about some variation of this in a moment. So again, we go up. It's a buyer failure, we call this in our video classes. It could be a bull trap, by the way. If we're lucky tomorrow, if the trading gods are shutting down on us here tomorrow, that will go a little bit above that high, right? If that's a higher high right there, it is a technical bull trap. Doesn't need to be, though. All I want to see is I want to get buyers once, buyers twice, use the failure pattern, and then as we roll over, where does the market want to go? I mean, there's a big range up here, right? It wants to rotate back and forth inside that range as it goes lower. Think about that bull trap. It's a technical bull trap. It's a lower low in price and a move right above that high. Now be aware of this because oftentimes we don't get that initial trap up there. Sometimes what happens is, sometimes there's so many bears up there, we run up and we get whacked right back down again. Not my favorite, but again, my job tonight is to make sure you're ready for no matter what happens here tomorrow. So if we get a V top off that high, if it gets whacked back down, keep an eye out because once it begins to grind down like this, the grinder is always the giveaway. Again, I would love to get a buyer failure up there, but if we don't get it, draw a trend line off those lows, bring it up around that high, all right? And then look left, find some of these prior swings, and what you want is you want the first test off the high of that channel. The way I'm drawing it right now, it's a bull trap first test, right? It's above that prior swing high with a series of lower lows in price. We talk a lot about bull trap patterns in our free trading classes. It doesn't need to be a bull trap. Oftentimes, though, what'll happen is it'll pop up, it'll get above the 21 moving average. And of course, in this scenario, momentum is turned for the bears. If I can get the buyers to come in and try to buy that pullback right off that 21 EMA, I can use what we call a failure pattern. Oftentimes then after it collapses back down, then you'll get that bull trap combination as it goes. All right. So think about that kind of variation of that bull trap. I'd love to go up 1, 2, and back down again, but don't be surprised if we just tap that prior week close up there and rip right back down. Think about that new channel. Grab that first test off the high. It could be a bull trap, a buyer failure, a pullback combination, any of the entry patterns you guys are learning in our free video class. Now, which reminds me, I've been talking a lot about the free video course so far. I know most of you guys and gals watching right now, you know this stuff. You know how ranges work. You know how failures and traps work. You're making money to stuff on your own. But if you're watching tonight for the first time, this might be a brand new language for you. Don't you worry. I get you covered. I teach all these entry patterns, the entire strategy. I have hundreds of examples of trading range-bound markets, bull traps, buyer failures. I cover everything in so much more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room so you always know where the winning trades are going to be each day. And of course, I want to help you start making money on your own. I'll teach you 4 of my favorite entry patterns. You'll learn failures and definitely a bunch of trap setups and a whole lot more in that free video course. Guys, if you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at a prop firm like Apex or TopStep, hit that link. You want to learn that roadmap. It's perfect for someone trying to make the jump into full-time trading. Also be aware too, I'm going to put all the important links tonight, the description of the YouTube video. I'll put the free class links down there. I'll put our trade room membership. We trade together every morning, 8 o'clock Eastern time. It's the best place to be every morning at the opening bell. And also too, I post a lot of updates on my Twitter feed, my X feed during the day. If you're on Twitter, if you're on X, give me a follow. All the details there, the description of the video. But that's where you got to go right now to learn more and see a lot more examples of things like these failures and these bull trap patterns I'm simply drawing up on the screen right now. Let's cover a few more variations of this, because again, I hope I get the kind of the perfect scenario, but I want to make sure you guys are ready for it no matter what these wild markets throw at us tomorrow. And again, later on in the video, I'm going to talk about if we go higher here. I will talk about that here in a moment here on the Nasdaq. Now, one of my favorite trades, we saw this today in the trade room, one of my favorite trades is a double top or a double bottom. For example, we had that big move down after the FOMC. We grabbed that beautiful double bottom this morning in the trade room. I love double tops and I love double bottoms. That, of course, was a double bottom in a range-bound market. Now, imagine we get that 1, 2, we get that beautiful, again, similar failure pattern. We get that roll off that low, but for whatever reason, we get our 1-to-1 first target. Our stop moves down to point of entry. Whatever reason, now they hold a level of support here, right? They may come back to this area here. They may hold that level of support, and they may try again. If they go back to retest the high again, now think about this for a moment. What if you bought that pullback? Anybody who bought that pullback, where would your profit target be? It's probably right back at that high, right? So is it safe to assume that buyers become sellers at the high? All right. Now, who's buying up there? Who would buy way up here? Not professionals, right? Professionals are buying nice and low, right? So is it safe to say that rookie traders are the ones that are buying way up here? Rookie traders are the ones we trapped into today, right? And selling down there? Yes, right? So if we find our way back up into that high, the buyers who got long, they become sellers at the high. And all of a sudden now, rookie traders come in. Small stops, small accounts, chasing after it. Think about that same failure, 1, 2, that failure into, what was it again? It's that bull trap combination coming off that high. Again, we call these, this is, of course, it's a double top scenario off the high. It's the same thing, right? It's a buyer failure, 2 tries. Why 2 tries? Because I want to run those stops. I want those stops to get hit to fuel that move going lower. Buyer failure into a bull trap combination. That is your double top. This morning we saw that run down. They retest 1, 2, right? And back up we go, right? Double bottom, same thing, just the opposite direction. Now, let's talk about more thing here. Let's talk about here if we do end up rolling off that high, right? Because hopefully what happens is, hopefully we get this run up, we get this bull trap, and it crushes it back down again. Now, what do we do if the market runs all the way back down? Well, most important thing is we don't chase after it. We don't want to chase after it. We know based on that 60-minute time frame, there's a good chance here we go up, crash back down, go all the way down, then back up again, right? Because that's how ranges work. They rotate back and forth like a pendulum swing. So if you think about this, if we get that run up and we can get that short coming off the high, now we don't want to sell low. What do? We sell high. Whenever I see a big move down like this, and most of you guys probably know this one already, whenever we see a big move down like this, we expect a pullback and a retest of that low, like back here, right? Like back there. Now, in most cases, what happens is it becomes a 2-legged pullback. Now, when I say 2-legged pullback, think about a measured move. Let me teach in the free video course, right? A measured move. Think about a 2-legged pullback that goes above the moving average and a little bit more than a measured move. Now, sometimes you don't get that perfect 2-legged pullback, so be aware of that. But when I think about a big move down off this high, I don't want to chase it going lower, but I do know all that momentum is going to want to pull back and double bottom, right? Like it did back there, right? So my technique is I always want to get underneath that moving average. Think about that measured move going higher, a bit more than that 100% extension. And then again, remember, we don't pick tops and bottoms here. What I'll do is now wait for those buyers to come in and try a couple times and trap them in for a retest of that low, right? So once we get back above that 21 moving average, we don't sell into it, right? I want to sell, but for all I know, it'll keep on going. What we do is we wait for those buyers to try a couple times and short back down and basically look for a retest of that low. Now, what do we do at the low here? What do we do down here? We take our profit and we look to buy it right back up again. Why? Because again, we're in one big range, right? One big range. Buy low, sell high. When you get into that free video course I mentioned earlier, you'll learn all about ranges and why I love them so much. So just like back over here, we get back to retest that low. Don't pick the bottom, right? I don't have a crystal ball. I don't know how far it will go, but once it pulls back, trap those bears in and use those stops, right? Trap those bears in. Again, think about it, right? Anybody who sold short right here, they're taking their profit off at that low. We're an overall bull market, big trading range in the 60-minute, perfect spot for a bear trap right here. Bears once, bears twice. Squeeze those stops, and where's the market want to go? It wants to go right back up, take out that high, great spot for a target, and tomorrow's a Friday. Remember, Friday mindset, leave that runner, and where does it want to go? Probably wants to go up around some of these big tops up here, right up around those highs, on the triangle high, right, guys? So keep that on your mind, on your radar for tomorrow, and of course, we'll do it tomorrow morning in the trade room, obviously, but that's the game plan if we do get that collapse, right? If it collapses off of that high, we don't chase it, we wait to get that 2-legged pullback, or at least like over here, at least above the moving average enough, we can then trap those bulls in back to that low, and then again, think about that double bottom 1, 2, it's the exact same thing right back up again. And obviously, again, I'm drawing the screen right now, a lot of examples of these pattern setups inside that free video course. Okay, so that's I think a pretty simple, some pretty simple game plan there on the S&P, and again, very similar here on the Nasdaq as well. Speaking of the Nasdaq, let's go to the Nasdaq now, and let's talk about that kind of backup plan, right? Because again, we're bullish here. We're bullish overall right now. We got non-farm payrolls coming, tomorrow morning. For all I know, I can't tell what tomorrow's going to bring, right? Or what the news will be tomorrow. If we rip going higher, there's a couple scenarios here I want to think about tomorrow if we do end up racing going higher here. Over on the Nasdaq right now, Nasdaq is again almost identical to the S&P. We get that big range on the S&P, or sorry, on the 60-minute time frame. On the tick chart, though, well, you'll notice, by the way, that it's a 4,000 tick chart. On the tick chart, I have my trading range. Again, the amount below the range, above the range, key level of resistance. I have my trading range. A breakout leg of a range is always a measuring leg. That's a key area resistance. It's very interesting how they all line up right at that prior high. And again, there's that prior week close. It looks lonely up there, doesn't it? It looks lonely up there. End of the week, the prior week close oftentimes becomes a bit of a psychological target or a magnet, so to speak. So we mentioned earlier the failure. Gorgeous example right there on the NQ, same in the S&P, 1, 2, back down again. And see what happens, right? They always like to go those failures. They run lower, and see what happens? They love to grab those traps, right? This is that sequence I mentioned earlier, right? It's that run up, that 1, 2, that move down, and that trap. I'm telling you, it may not be perfect every time, but this is a very common scenario during ranges. Failure pattern, trap pattern, failure pattern, trap pattern. You guys will learn more about that, of course, in the free video course. So everything we talked about before on the S&P can pretty much be applied here now to the Nasdaq as well. Let's now talk about, though, if we go higher, right? If we go higher, if we end up blasting higher, the sequence I want to think about is I don't want to buy high. I want to buy that two-legged pullback and a retest of that high, right? So if we do end up racing higher here, again, I'm not going to chase after it because it'll probably be happening during news. What I'll do is I want to get that two-legged pullback we mentioned earlier. Remember that two-legged pullback, right? That one leg, that two leg, a bit more than a measured move. I'm not going to try to pick that bottom either. What I'll do is I'll go in and trap those bears in. 1, 2 for that run back up. Think about that failure into in this case, it's going to be a bear trap pattern on the way back higher, right? That failure to trap pattern combination, right? Back up to retest the high. Now think about this, right? Again, range bound market overall right now on the 60-minute time frame. If I buy that two-legged pullback, where's my target to be? Yeah, a good chunk of it will be off this high. So not a great place to be buying up there. If we start seeing rookies come in, you know the answer to this one, right? It's a 1, it's a 2, it's that failure into that. You probably see this in your dreams at night now, right? Failure into bull trap pattern. I do see these patterns when I sleep at night. That's crazy, right? But that's the way it goes, right? Doing this all day long, every day. So think about this now. This is one of the two scenarios if we do run higher, right? If we spike up going higher, don't chase after it. Think about using these prior highs, right? Think about using those prior highs. Get up, two-legged pullback, trap those bears in. Remember, if we see a strong run like this, the buyers are going to want to retest the high before they run back down. Right? Remember, if we see a strong run lower like that, the bears want to what? They want to retest the low and then back up, right? So if we go higher here, if we get that strong run going higher, that two-legged pullback and that retest of the high. Now, here's a question. How would you sell during that pullback? Right? How would you short that? Well, at this point now, that momentum is really, really strong. The way you short during that pullback is what's going to be a crown reversal. Now, crown reversals are basically just bull trap patterns. It's a lower low in price, right? And a trap below that low, below that high. Think about now, again, one leg, two leg. There's your two-legged pullback. Two-legged pullback. Again. Now hold on. This may keep going, right? It may keep going. It may start grinding down like that, right? If it grinds down like that, you know what to do, right? Off the lows, off the highs. And what do? We short that first test off the high of that channel, right? So it may roll and go back down again, right? Makes sense, okay? So keep that in mind. That's that V-top example scenario we talked about a moment ago on the S&P. However, if they don't, right? If we start holding some of these prior highs up here and the bears try once and they try twice, remember, I'm not going to pick the bottom on this. I'm going to let these rookie sellers come in and get short. And once we see those bears are committed, now we know where their stops are. We can squeeze those stops and potentially snap right back up to retest the high. And again, that's that same spot now where double bottom reversal, right? Double bottom is 1, 2 for the bears and back up. Double top reversal is 1, 2 for the bulls, back down again. That's where the magic is right there. Now remember, this reversal, this crown reversal is a half-size position, right? It's a bull market at that point, right? So half-size position, quarter-size position is what I always do, right? In those scenarios, a little bit smaller position size because, again, they're not as reliable as the two-legged pullback and the retest of that high, all right? So keep that sequence. It's a crown reversal pattern, a bull trap. It's a failure pattern, and, of course, a failure pattern off of that high. And again, this will make a lot more sense once you're digging through that free video course I mentioned earlier. The only other scenario would be we pop up and we go sideways now into a trading range. Okay, ranges are the easiest ones to trade. You know this if you work with us, the trade every day. If we pop up into a range tomorrow, what you want to do is find levels of support below the range. Remember, ranges act like magnets and they love to rotate back and forth. If it goes sideways into a trading range, wait for that breakdown. Look for that failure into that bear trap combination we mentioned earlier as we make our rotation where. We try to rotate where the amount below the range, the amount above the range, leave that runner because, again, tomorrow is a Friday. So if we do pop up tomorrow for news, but because we got that non-farm payrolls and then we have the ISM services, right? So we may have this thing pop up into that trading range. Again, I love the idea of a bull trap off the high, but the news may not make that happen, right? So if we do pop up into that trading range, think about those bear traps, basically a seller failure pattern we talk about in the free video course, and then definitely a technical bear trap as we rotate back off that low. I always take some profit off at the top of that range and then leave some runners right up to the top of that pendulum swing. The only other variation of that would be like this. We go up into that trading range, we run up first, we get a crown reversal off the high, it's basically a bull trap off the high, that then swings back down, again, pendulum, that gives you your target on that crown reversal short, right? It's basically a bull trap short. Then all we do is trap those bears in. Now, very important here, this momentum will be very strong at that point, right? It may punch and keep going, so watch out for that pop and grind channel we talked about before on that one. But again, most of the time, it'll 1, 2, and bear trap, failure pattern, right back up again. Trade that rotation. Buy low, sell high. Don't pick those tops and bottoms. That's a rookie mistake. Trap those buyers and sellers in. Use those crown reversals going against the trend. Use those failure patterns going with the trend. And we'll talk a lot more about this obviously tomorrow morning and next week in our trade room. Guys, that's the game plan for tomorrow. I'm getting excited just talking about this stuff, right? I love how these videos get us mentally prepared for the following day. Now, speaking of tomorrow morning, 8 o'clock Eastern time, the best place to start making consistent money is come out and do it with me every morning, 8 o'clock Eastern time. We trade together every morning. I would love to have you there with me. That's what the good stuff is. Every morning, I'll put all the free class links, our trade room membership links, everything in the description of the YouTube video. Any questions, any comments, any issues getting started, don't be afraid to call the office. You can always use live chat there. We're always here to help out, answer questions if you guys have help along the way. All right, guys. Well, what a fantastic week it's been. We got one more day left. Hope this strategy helps you make a lot of money for tomorrow. And hopefully I'll see you trading with us sometime soon as a student in our morning trade room. In the meantime, be well, be nice to each other out there, and you better be here next time, right? Adios, amigos. Bye for now.